Plus the management of Persistent Systems. That was the big mover in trade yesterday. Sandeep Kalra, Executive Director and Chief Executive Officer, Persistent Systems, joining us this morning. Mr. Kalra, great having you. Let me first start off by understanding you've paid 81 euros a share, which is a substantial premium. How do you justify the acquisition at such a substantial premium? Give us a sense.
If you look at the value, we have paid 81 euros. The company, when it went public a few years back, had touched more than 200 euros. Every company is, in today's day and age, especially if you are listed in the US or in Europe, the valuations have followed pretty dramatic path downwards. And that's also where we believe we have given a rich valuation for the exiting shareholders, and we've got something that can accrue significant value to our shareholders over the next several years and decades. That's the answer to that.
Sandeep, you guided for a deal to be cash EPS accretive from year one. How do you achieve that despite taking on the acquisition debt?
Sure. So from an EPS accretive perspective, yes, it is going to be EPS accretive from the first year itself. And that is after paying for the debt and so on. So from an interest cost perspective, obviously these things are, you get tax benefits as well on that. So if we look at the interest cost, if you look at the amortization cost, everything put together, even after that, we are positive, and this does not take into consideration any kind of revenue or cost synergies. So if we overlay that, and that we will build up over a period of time as we get the revenue, as we get the regulatory approvals, we'll lay those out as well. Till that time, it's too premature to go out and say this is a revenue synergy, this is a cost synergy. But from what we have done in diligence, without even any synergies, 5 to 6% EPS accretive. If you're able to get the synergies, which we definitely will, it'll be hugely accretive to our shareholders.
Okay. The acquisition is being funded through an 18-month bridge loan, Mr. Kalra. What is the refinancing plan thereafter? What can investors expect? Is an equity dilution likely at all?
Yeah, typically in any large M&A, you will see a bridge loan. That is the way to start. That is typically anywhere from 6 to 18 months. Our bridge loan is 18 months. Within that 18 months, we can refinance, we can do bonds, we can have various other sources. We very clearly said we are not diluting our equity, so we are not going in for a QIP. And there is significant interest from the time we have announced the acquisition from third parties like private equity organizations to partner with us on this transaction. All the avenues are open to us without diluting our equity. And we are very confident, even with the bridge loan being refinanced, the interest rates are pretty attractive. We can pay that off without any participation from anywhere, without worrying about any kind of EPS dilution.
Sandeep, does acquiring Nagarro fundamentally change Persistent's long-term growth trajectory versus what you could have achieved organically?
Yeah. So the right way to think of it is today Persistent is growing in the mid-teens to high teens kind of range. So we are at a 17% rough, give or take, growth rate. Nagarro is today constant currency basis in the 5 to 6% range. Our hope is as we come together, as we get the synergies to come together, as we bring the science of doing larger deals into Nagarro from a Persistent perspective, take their capabilities like SAP and others into our cross-sell, upsell kind of opportunities, this should accelerate their growth and the growth combined for us. Obviously, it'll be a multi-year journey. We are not saying that the next quarter Nagarro's growth and Persistent's growth will shoot through the roof. By the way, keep in mind, we also announced a fairly large deal over the weekend when we announced the transaction in Persistent. We booked a large deal, which is net new, 125 million ACV over the next 12 months, TCV of 650 million. That should give enough confidence to people who understand our metrics that the growth engine will keep humming.
And what growth profile do you expect Nagarro to deliver under Persistent, and how quickly can revenue synergies begin to reflect in the reported numbers? What's the timing like?
Sure. So first thing, I don't want to jump the gun. There are regulatory approvals that we have to wait for. So in this bid process, the regulatory approvals will take anywhere between 4 to 6 months. Once we have the regulatory approvals, and assuming that the regulatory approvals are in our favor, we close the deal, the clock starts there. Before that, we cannot even partner together. We are two public companies, and even once the deal closes, we'll have to run the companies as two public companies for a certain period of time till the time we do the squeeze out. So I want everyone to understand that. Now we can start collaborating as soon as the deal closes. We can start bringing the best practices of each other into the companies within the legal framework, which we will put together. Now, it will take us anywhere between 6 to 12 months to get the synergies to kick in. And on the revenue side, it is revenue growth. On the cost side, it will be optimizations. Wherever we are subscale, we have multiple offices, we can consolidate. From a people perspective, this is not a consolidation play. From a people perspective, we are less than 300 of our team members in Persistent in Europe. Nagarro has more than 2,700 plus. Combined is 3,000 plus. Similarly, in the Middle East, we have zero, no presence. So from that perspective, the optimization is more on the G&A side or the facility side. On the revenue enhancement side is where the major plays, and that will take 6 to 9 months to kick in high gear, and then we go from there. And this will be from our perspective, we are building a company to last in the right technologies, on the AI-led thing, in anything that we do, and build a company that is very diverse in terms of the geographies from a customer perspective. So we can go from being a challenger to a credible player against the tier ones with the agility of a mid-tier.
So Sandeep, give us a sense of FY27. Is it going to be an integration year for you? And by FY28, what kind of growth profile should investors expect from the combined entity?
So I can give you aspirationally what we don't take that as a guidance. We don't give forward-looking guidance and Persistent at all. Now, if you look at it, the way to look at it is look at the pro forma. Pro forma, there's a certain growth that Persistent has. There's a certain growth that Nagarro has. So if you were to now start modeling it, we would say in the next 12 to 24 months, it should start coming towards a little bit towards what Persistent level is. In 36 months, both the companies should be performing at the same levels. That would be our aspiration. If we can do it faster than that, absolutely.
Okay, and Nagarro has indicated, I mean, we spoke with Nagarro yesterday, and they've indicated that EBITDA margins can improve. What Manas was saying is that there is scope for improvement there. How quickly do you expect those margin gains to start reflecting, especially after the acquisition?
Yeah. So look, every organization has a rhythm with which they operate. Nagarro has been run very entrepreneurially, and as you know, Manas may have spoken to you, they have started the journey themselves without Persistent as well. So they brought in a new CFO. They're trying to bring more regimented operations, etc., etc. So there is enough and more to be done there to be able to get the company to perform while not and optimize cost a bit while not degrowing or impacting the growth. So there is work to be done there, but it is achievable. We are confident we can bring the margin up, but we are not, this is not a margin play. This is not a play where we are looking to optimize and be a value company. This is a growth play. So from our perspective, we'll optimize a little bit, but invest back. First get the growth, then improve the margin, look at the Persistent trajectory. That's the story at Persistent. That's what will continue.
Mr. Kalra, really appreciate you coming in and giving us that perspective. Of